Welcome, everybody, to another episode of Timeless Wealth. Today, I have with me Jalal Midani and special guest, Jonathan. Welcome back. This is Jonathan Kahn, director in the National Client Group. You were on here last time, but with a mustache. So for all those people watching, it's still the same guy.
Same guy. Mustacheless. Well, it tells you how long it's been here. It's been, 8 months? Because that was my Movember mustache.
Right.
Yeah, it's finally gone.
It pretty well.
Feel a little lighter.
You rocked it pretty well.
But it'll be back. But
we're in a bit of a different environment this time too. Interest rates have continued to rise. And so today we thought it would be interesting, instead of talking about from the market perspective, because markets tend to be going quite well. Mm-hmm. But it asks the question on the lending side and from a credit perspective, what are your clients facing? So for business owners today, that's what we're going to dig into.
Okay.
And welcome to our new location of our podcast.
Yeah,
so you're the first
it.
one in the new location.
Excellent.
So welcome.
Pretty
So
awesome.
coming up next, a great discussion on credit with Jonathan. Well, welcome everybody, and thanks again, Jonathan, for being here. So again, we're going to be talking about the markets from a credit perspective in the current environment that we're in today. And so you started talking, we had a conversation earlier, and we started talking about the 5 C's of credit. So we thought maybe we can address what those are as a refresher for people, but then kind of dig in on what areas of those that we're thinking about given the current credit cycle that we're in.
Sounds good. So for a bit of context, so in my role in corporate lending, credit is something that we dive into literally on a daily basis. Yeah. And it's probably in and around as exciting, I understand, as an accountant talking about audits. But when it comes to lending and lending of all sorts, not just lending in corporate lending that we do, but lending to individuals, to small businesses, to even the largest corporations in the world. The fundamentals of looking at credit is fairly the same. And so there's this concept of the 5 C's of credit. Yeah. And the way I like to think about them are in a bit of 2 different pieces. One is more of the science, and then the other is more of the art. So there's a bit of art and science to credit. And so on the science side are the things like capacity, which is a borrower's ability to make its individual loan payments. Mm-hmm. So you can think of this as its ability to service its debt.
So that's like more like the technicals.
Correct.
Right?
It's technical, quantitative, if you want to think about it that way. Yeah. There's capital, which is the amount of wealth or assets that an individual or a corporation might have to support their loan.
Right.
And then there's collateral, which of course is the security that might be available. Now, those 3 things together are fairly easily measured and can be found through balance sheets and through the income statements and the financial statements. So, but fairly quantitative, and you can measure those, and that's fairly straightforward. Yeah. The other 2 C's of credit are character and conditions. And I like to think of these more as the art of credit. Yeah. And so you can imagine character is really around the track record of repayments, the reputation of the business and the borrower in the market. You know, these are sort of things that are qualitative in nature, a little bit more difficult to measure, things that you really need to understand the management, the ownership, the leadership of the business to really get a good assessment of the character and what they are expected to do. Right. And then the last is conditions. And typically conditions is something that we think about from the perspective of the conditions of the loan. What can they do? What are they not allowed to do? Right. What's the tenor or the term of the loan? Right. However, I also like to think of conditions like what are the market conditions in which the loan is being provided. And right now, like you said, interest rates are high.
Like industry conditions, like
Absolutely.
If they're going through different cycles.
I think about all of that when it comes to conditions. So you can see as you think about it in those 2 segments of art and science that you bring those 2 together, and that is the way that credit is thought of, as I said, from individual all the way up to the largest corporations.
So if I'm a business owner and those 2 that are just, to your point, they're not easy to measure, what sort of things help you assess that? So if I come to you, what sort of things are you looking to assess my character, reputation, condition? Like what sort of things are you looking for?
I'll split it up into 2 things. Yeah. One is character. Really, this comes down to relationship. Right. And knowing your borrower, your prospective client, your client, and that takes time to develop a relationship, get to know them, get to know their management team, understand the business itself inside and out, in some cases, meeting with some of the senior management of the different divisions.
Right.
But you're taking everything that you can to understand that individual in person. And that can take some time, but it's time well spent.
As a business owner, I really want my banker to understand my business so that when I come to ask for certain things, that you have a concept and I'm not having to re-educate all the time. It's like you get me, you get what I'm trying to achieve.
100%. And it's not something that is only useful for a credit decision. Building relationships, understanding what's most important to them, how we can be most helpful. So there's nothing wrong at all with doing that. It's very, very helpful. Also in banking and lending, we've got the concept of know your client. So there's certain compliance requirements that we have to make sure that we understand our client, we understand what's important for them, we understand the products we're selling to them. Right. So there's a lot of good reasons why developing a really strong relationship is important.
So that relationship would go under conditions, right?
I would put that under character.
Under character.
Yeah.
Okay, so I just had I think you had a question. I just had a really quick question, and that was cool. Okay, so you mentioned before the three, I'd say the tenets of science. So capacity, capital, and collateral. Those are more like probably like historical data, right? Or just up until the day, obviously, of review, under review. And then you were talking about the conditions, right? Sorry, character, about getting to know your client, right? And that can take time, the relationship and understanding the management team and all that stuff. Does it change from one sector to another? When you're analyzing, for example, even the management team or even the raw data that you're getting, for example, previously you mentioned balance sheets and stuff, things that are easily measured, quantitative. My question is, does the context change from one type of company or one company in one industry versus another company in another industry? Like, does the debt or does the information does the context of the information change from a tech company to a health company to a transportation company? Any thoughts on that?
Absolutely. Yeah. Every industry has its own drivers, its own risks, its own nuances. So while on the surface, a lot of the metrics that we might look at when we're assessing a borrower or looking to lend money will be similar, there might be different levels within one industry or another. So one industry may just generally be more capital intensive, and therefore you might expect certain metrics within the business to be a little bit different than, let's say, a software company, for example. So there's certainly different industry metrics that you would keep your eye on.
So of course, then in that case, the individual, so the banker would obviously have to have a deeper knowledge in that specific industry or sector. Like he can't just take, if he's like very specialized in transportation, you can't really use that specialty to apply, for example, to a software company, as you mentioned, or like a tech company, right? Like you'd have to have an understanding of how that sector operates, at what cash flow, at what debt level, all that stuff.
Absolutely. And that ties back to, the discussion you're going to have with a client or a borrower about character, right? Getting to know their business, and that helps.
Well, and I think you might be able to talk on this because this is what I found with your group. Because of the way we're organized here at National Bank, the access that you have for industry specialists and the data and research that you can get on those industries.
Yes.
You're much quicker to get up to speed on a particular industry versus, just a general banker who doesn't, has to kind of feel their own way. We have deep connections with that department.
100%.
Which is really, really unique.
It's a huge tool in the toolbox to be able to leverage the industry expertise from our investment banking group, from our M&A group. And that ties back to the last C, which is the conditions, is lending in particular conditions and different market requires us to rely on teammates and other colleagues. For example, we'll reach into our economic research team, and Stefan Marion here at National Bank will have research that he and his team put out. We'll leverage that to understand, what does the market condition look like? What are the things we should be thinking about when we're putting a loan out? What are things that we can bring to our clients to give them information to help them make better decisions as far as the current market?
And by market conditions, obviously, of course, also futuristic outlook, right? Like for the next 2 to 5, 10 years or whatnot.
Certainly. And then as well of the conditions of structuring the loan. The way I think about it is, you can buy a 4-bedroom house with 3 bathrooms and have an architect design that, but you could have the same architect design a 4-bedroom, 3-bathroom home in an infinite number of ways.
Right.
And if you think about structuring a loan or making the architecture of a loan, it's the same thing.
Right.
You can have a tenor and a price and all sorts of other quantitative metrics, but it's really around, what are the covenants? What are the conditions? And that, again, leaning on the quality of the teammates is working together to come up with a structure that makes sense for the client and really tailor something so that we can set up the conditions to give the loan so that, you know, both the client and ourselves.
Which again makes sense. If you have a really good understanding of their particular business, those things can be really accretive to their bottom line if you know how to set it up properly.
Totally. Because we want to give them as much flexibility as they need, which again goes back to understanding their business. What are the drivers? And then we can tailor what we're doing to them.
Give me an example of a structure of a loan. Like I've never obviously structured a loan, never gave a loan out. What does a structure of a loan look like?
I'll give it at a high, give it at a high level. So
I'd love to
you'll
know
have
that.
certain metrics around the tenor of the loan. How many years are you going to provide that commitment to the borrower? Certainly you're going to have pricing as a component of that. You're going to have financial covenants that the borrower has to stay within as they're moving themselves forward. And then you get to the nuances of negative covenants, things that the borrower may not do. And so those are the ways in which you can keep guardrails around the client. And in some cases, there are things that are very, very important that they need to have flexibility on. So you can give a little bit more latitude on those particular negative covenants. And then on the things that maybe you want to be a little tighter on that doesn't have as much of an impact on the client, you can be a little tighter there. So it's all about really understanding and fine tuning that structure to make sure that you can find something that works best for them as well as the bank.
Yeah, that makes sense.
Makes sense.
So I think that covers the 5 C's. But now my question is market environment.
Yes.
How do we look at things now? Like you were just talking about covenants and things like that. That's obviously probably having an impact as rates continue to go higher. The impact on the business from our investment side, what we're seeing is markets look really great right now, right? We've had this good recovery the first half of the year. But we asked the question, if rates keep going up, there must be an impact that's going on with businesses, and you're seeing that on your side. Can you tell us a little bit, what you're seeing on the credit side right now?
Yeah, definitely.
And how it affects companies, like how the companies are actually getting affected.
100%. 100%. Yeah. So I'll take a half a step back and just think about the environment that we're in right now, where in Canadian banking, you have a lot of excitement that we haven't seen before. Canadian banking is not usually a place that you expect to see excitement, but you have
pretty boring.
One of the large banks made an acquisition in the U.S. and is navigating through that. You had another Canadian bank not proceed with an acquisition in the U.S. You have another large Canadian bank acquiring a Canadian division of another bank. You have another regional bank in Quebec announcing a strategic review and potentially selling themselves. So all of this happening in the dynamic of the Canadian market. And so the reason I raise that is because ultimately, as institutions are thinking about their own strategies and what they're doing and their own risks, it does play a role in how they make credit decisions.
Right.
And so what we're seeing now within our own book is companies...
And just on that, I was going to say the reason for that is they have to have, the bank itself has to have capital available to make these acquisitions and these purchases, which may change how they lend to the business owner, right?
Yeah, I was just going to ask the exact same thing.
You got it. So their credit committees and their credit groups are looking at every transaction. Now, of course, it's not just related to what's happening in the banking market. If you look at, like you said, interest rates are rising.
Right.
Inflation is still high. There is the potential for a recession, depending on who you speak with. And so all of these things are in the minds of executives of all sorts, but certainly within the bank and certainly within the credit department. And so when they're looking at loans, and it makes complete sense, you would understand this completely, they need to be a little bit more cautious. They need to be a little bit more thoughtful. They want to be a little bit more judicious with how they're deploying that capital because it is scarce. And so what we're seeing in live time is transactions that, for example, I was mentioning this before we started recording, we were in a transaction within our group where the other lender was right at the table all the way up until preparing to close. And just before closing, came back to the borrower and said, listen, we'd prefer to have another lender here. And we stepped in and participated there. And so that's a perfect example of a live transaction that I've been working on for a few months that almost got to the finish line. And that credit committee or that banking group decided, you know what, we're going to take a little pivot here.
Yeah.
And so stories like that can a really good indicator that when things are volatile and things are uncertain, you will see behaviors like this from
So that's a good point
lenders.
because as a business owner, right, we're just coming to the bank going, I need a loan, but we also have to remember the bank is a business itself and they're looking at their own loan books, their risk, how much they have in one particular industry versus another. If they need capital for other parts of their own business, that all becomes part of that equation. So to your point, that relationship and that art piece, you might want to have multiple bankers in the event that something might be going on with your main
multiple
home
bankers.
bank.
It comes back
So
to the
true.
one
Well,
got
yeah.
two bankers.
Here we go
got it.
again.
I
Back to
mentioned
that.
this last time we talked, and
Yeah.
and I said it kind of as a joke last time, but we hadn't. 8 months hadn't passed yet, and now we see
look at
what's
it, yeah.
happening. And I joked about it before, but it's serious. It's true.
Yeah.
Even if it's not to move your business, even if it's not to do another transaction,
Right.
it never hurts to talk
the
to get a second
flexibility.
opinion. We
Yeah.
do this when we go to the doctor. We do this for all sorts of things,
Right.
even when we're taking decisions amongst our friends for something,
True.
insignificant. We'll
Yeah.
ask a couple of
Well,
friends.
to your point, going back to the architect, of course, if somebody models it one way, you see how somebody else models
Precisely.
it, right?
Yeah,
So if you're a leader in a business, CEO, CFO, or any senior leader within a business, you should be talking to more than one bank.
Right,
You should be
right.
getting advice from.
Well, can
picking the
I
brain of-
imagine
yeah.
that client you just described, they get up to that final stage, they think everything's good, and all of a sudden, oh, wait, change, you need to bring in another banker on this transaction.
Right.
Like, that's an impact to your business.
Nobody
100%,
likes
like,
100%.
what?
Nobody likes negative surprises.
No,
And
no.
so, these sorts of environments are all about mitigating risk, being proactive. And so having many options is
Yeah.
always a good way to
Right.
go, so that you just avoid those things and you can sleep at night.
Well, one thing I will say, particularly about National Bank, is they are doubling down on their commitment to Canadians and Canadian businesses, right? We haven't moved to the US
Yeah.
in that big way. So that's a big, push for us right now is focused on Canadian businesses. And you can see why, because there's a lot of distractions that are going on at the other banks, and that's the opportunity, right?
Yeah,
So-
absolutely. I mean, we're really fortunate in that we were covering outside of Quebec, which is a
Yeah.
lot of white space for the institution.
Right.
And it's an opportunity for us to come at the market in a thoughtful way, in a
Absolutely.
proactive way, do a lot of listening and learning with our clients and understanding,
For sure.
and then executing with excellence and
Right.
bringing in the right team, bringing in the group holistically, and
Right.
not just looking to be transactional with clients,
Right.
but looking to really build a good long-term relationship so that we're supporting entrepreneurs, family-founded businesses, because
Right.
the reality is the country was built on entrepreneurs
Yeah.
and taking those risks. And so we want to be supporting them.
Yeah,
And,
Yeah.
I think
and
the
driving
last,
them forward.
consensus was like 65% of businesses in Canada are small businesses, family-run businesses, and that's where the majority of employment comes from.
Yeah,
so
no
it's
doubt.
definitely
Yeah.
a great industry. We're at we're close to about 18 minutes, but you did have one of the questions that I really loved.
What was that one?
This one right here, I think.
Oh, how
The
does it
difference between
differ?
an individual
So
and a business.
lot of what
yeah.
you said around the 5 C's of
Yeah.
credit, right, can apply. It's the same from a personal, like if you're going for your personal loans. But what are some of the things, and you've touched on a few of them, but you look at it from a different perspective from a business. So you still have like the character of the person doing a credit check.
Mhm.
On that art piece, like we talked about,
Yeah.
what other things are you looking for, and how do you collect some of that information?
Like if we had a listener right now listening and he wanted to see if he's got all the check marks to approach you guys to get a loan, for instance, on the character side, like,
Okay.
as
As an individual or as a corporate?
as a business.
Let's say
I
as
would
a
say
business.
as a business.
yeah, what are some things you'd want this individual to hear for his business, and make sure he has those check marks checked off.
Certainly we want to see a track record of the business just being managed effectively.
Mm-hmm.
And, we can gather some of that when we look at statements and look at historical
Right.
performance. But we also want to ask about different challenges the business might have
Mm-hmm.
had and how they navigated through that. We also
like
want to
that. I like
understand
that.
the ownership structure. And if there
Mm-hmm.
is more than one owner, what does that relationship look like between? What's the succession plan going forward? Because that can have an
Right.
impact on how they ultimately manage the business or deploy
Mm-hmm.
folks to replace them when they move themselves forward.
Mm-hmm.
So I know it's not as specific an example as you would like, but the reason for that is because it's so nuanced in the information that you need to learn about
Right.
meeting a CEO or a CFO or a shareholder,
Yeah.
understanding their business, what's important to them. That takes time, and it takes a lot of thoughtful back and forth
Right.
and questionation to make sure that we can understand what's most important for them, but also what are they like? What's sort of the feel that you get?
Yeah. More of like definitely, like as you mentioned
Yeah.
before, more of a qualitative analysis
Yeah.
of the
Yeah.
individuals that are running the company itself, the industry, all that stuff for sure.
Well, it's all about getting to know your banker and getting your banker to understand you, right?
You
So,
got it.
and you're great at having those conversations and bringing that information to light on the art side, and obviously you're great at the science
Jonathan,
side.
it was
So
a pleasure.
perfect match. So
yeah.
Thank you again. This has been a great chat today, and we'll have you back next time, and hopefully before the mustache comes back.
My pleasure. Good to chat
Thanks,
with you
Jonathan.
again.
I can't wait to see it again.
Absolutely.
Till next time.